Good morning and welcome. It is Crypto Day, that of Thursday, 19th day of April 2018. My name is Derek. Everything within your own risk, own reward. Not much to say about Bitcoin, which is why I presented the 4-minute morning and the format in which I have done. So there's not much more to state. It's doing well short term, but yeah, that's sideways consolidation. Productive so far, but the statement of reverting trend like it did in here, it's either going to do so or not. On the F not, failed move, fast move, and if it does so, then we can expect higher highs and higher lows to resume its pattern. This chart shown is my performance trading, or mainly against the altcoins, since I started doing the strategy mentioned last week. The original down move happened 1 week ago, early Friday morning. Therefore, for the last 7 days, crypto markets have been in a beautiful uptrend. This high was last night before going to sleep. This low was waking up, and today, just a couple hours later, it's doing well. So markets for me up 15% in the last week on my altcoins. We can see so with codes, same thing, like RDD, how they have had spectacular gains over, this is day 2, 3, 4, 5, 6, 7. So in this market on April the 11th to 12th, you've seen how it fell through like that. That was an interesting day because practically every single altcoin went down at that time. Say OK Cash as an example. Well, not down as much, but this code is showing a nice little breakout pattern. A lot of them, Zen is in a huge uptrend. It started it a long time ago. There really isn't too much need to go over too many of the codes in this video, so I'm not going to, but rather that when the alternate coins go up and down together, it's a normal situation. For last year, everything got going at the start of March. Some were earlier, and there were a few that lagged behind. And same thing on the top. Some were earlier topping, some were later. But as the months of June came to a conclusion, a lot of altcoins topped sometime in June. And they went down for quite some time until mainly the end of November, where everything went up, starting in December. Some were early in November gains, but as we can see in here, this one started going good in December on, well, this was a little bit off on it, but it had its gains as a laggard, and it topped, a lot of them topped in January. So this isn't a good example to show what the normal one did. NXT as an example. Look at how it got going roughly in November. Bottom November the 5th. Had a small little rally. Small really up to the 1128. But all the coins rallying in November. At the end of November into December. And then, of course, topping. So here we stand in the mid to later parts of April. And when looking at random codes like Ardor, this is the nicest the 18 averages look for. It's been looking good since the start of April. So it's looked good for a couple weeks. When's the last time we can say that? Not in this downtrend. Can I say the similar things about other ones? Selous. It's been in a nice positive uptrend for, well, several days here. When's the last time that has happened? Well, quite some time ago. ADA, Cardano. Well, obviously it's no-brainer. It's reverting its trend. That's what these codes are doing. And I brought up a quick little thing before. I'm just going to explain it in here. This is a double bottom that's breaking out, but when you look at people getting into Bitcoin, and then you do follow the money kind of deal, when someone buys Bitcoin, how do they do that? What does that do to the market? Because if somebody goes to a place like Coinbase to get their Bitcoin, or any other online site where you put your credit card in, or whichever method of payment, and then you get your Bitcoin. That's fantastic. Okay. So in spots like that, don't even think you're really going to move the market. And if you do, talk about moving at pennies. And you have to be a big player to really move it. You can't move. Even if you think you're big because you're putting in like $250,000 or even $1 million. That's not that big buying in Bitcoin. It doesn't move the market much. But if you're putting in $250,000 or $1 million into Bitcoin, and you then start putting that into altcoins, oh boy, you could move the market a decent amount if you put a lot of that amount into one of the coins, depending on, of course, which market. And that's the whole point, because for the amount that you buy in Bitcoin or sell, whichever direction you're looking at it, it's going to move that market a lot less than that amount will within the alternate coins. Big time. So you have people that buy those coins, then those coins get moved to an exchange like Binance, Bittrex, or whichever one they happen to choose, and they buy alternate coins. Okay. You have people who even buy Bitcoin from a friend down the street. Yeah, you got, I want to buy whatever amount off you. Oh, okay. They pay cash. Market doesn't even change on the Bitcoin price because no exchange acknowledges that transaction even took place. But then that person takes a Bitcoin and then buys altcoins. They go up. And Bittrex, for pretty much most of the year, was stopped accounts. I don't know about other ones. I hear like a lot of them just couldn't handle the new amount of customers. And then I read a few days ago that Bittrex has temporarily stopped allowing new accounts, which was like, okay, this tells me they now allow new people in. New people are coming in. A lot of people came in because they couldn't handle the short-term influx of new people. And now things are rolling back to the upside. When we look at the size of these moves that they've had, when you look at a chart like this, you're like, oh my goodness, it's up too much. Is it up too much to buy? Yes and no. But then the no is because look how high these things go from its bottom peaks, going from like the bottom of 36 up to like 1600. Well, now we have a bottom of like 46, and it's only went up like 50%. So yeah, that's where the yes and no comes in. And then of course the fact before you could get in cheaper, maybe it'll pull back, but then maybe it won't. When you look at anything like this, after it's breaking resistance, barely noticeably and not much more than noticeably, this thing has full potential in a code like this to keep on going. When you look at this on something like a 1 hour time frame, and this is about, and I don't care that this code is strat, and I don't really even care what these numbers happen to say. I'm looking at the market in here. Of course, it's good to know the code when you're actually trading it, and it's good to know the numbers when you're playing the volatility game and understanding percentage moves and all that type of stuff. But market goes sideways, correcting through time, leg higher. Then it corrects through time again, goes up, corrects through time again. So therefore, it becomes very difficult to predict that it's right at this stage when looking to enter in to wait for a pullback. Because when you have a situation when price action is strongly well ahead of this 18 average of highs like it is overextended. And very rarely is it ever a spot where you would look to be buying. And that's why I use the word very rarely, because you got a situation of 2 pause periods following what is a decent size but not that great of a green candle, after you had the span of these 3 periods: big green candle up, small green candle up, big green candle up. So you've had a correctionary phase on that move to small proportions. So that's reason number one. And then reason number two is when you look at the more longer term situation, also extended well above the 18 on this, that the potential for large gains comes into play. It also means that the risk amongst such a situation is that this could very easily have a successful correction to the line and even piercing below the line. Okay, that's enough on that code and just that type of topic information. And a lot of these codes, like Vertcoin, this is the best I think this 18 average has looked within the decline. I think this move is looking a lot better than it did back in February. And it's dragging its way within an uptrend, staying and playing a lot, or having a lot of its time right now within the 18 average of highs. It made a move close to the lows. It's a very productive setup. And stuff like SBD, Steam Dollars, pretty much the exact same sort of pattern. There it is. And this one looks beautiful when you look at its technical analysis setup. From the bottom, it rallies up very well. So the major volatility, this is over 2 sessions. Anywhere up to 48 hours, but it could even been like 6 or 8 hours. And you can find out with the hourly time frame for that, and let's do so later. Leaving the 200 handle, rallying up to the 470 handle. That's better than double. Pulling back to the 260 handle. Not quite half, but a decent chunk. And then this is what you would define as what you're looking for as a successful correctionary phase, because you have a big up or down move. You're going to have to correct some way, somehow, whether through price or through time within the 18 average. This was not through time. This was through price, at least its original move. Because it grinded higher through time, through price. And when we look at this on the more longer term, is this the best move that it has had since the decline? And its decline was pretty early. I mean, this thing topped when a lot of them got going back in December, with a lot of beautiful up and down choppy moves. If you're looking for intraday movements, I'm looking for them. And how many times did it look fantastic above the 18? Well, in here, it got above it on January the 20th, but it didn't do anything below it. Got above it here, but that's like nothing of a move. So yeah, this is the best it has looked within such that you've established a multiple hit point of resistance at this level here, where it's at was before. It's already pulled back already to the 18. Let's take a look at the 60-minute time frame, because you see all these nice up and down choppy moves. And how long did it take to have a gain of about 150%? So there we can see this choppy move. Now when you look at this, I want to take a look at this now on a 15-minute time frame. You didn't have much time to sell this. It was really, really hard. I didn't get great sale. This is Steam Dollars. I would have sold here. But anyway. The moves are fantastically large. Of course, I'm looking for which. Now this is the move that I'm looking for, the move that went from 20 to 50, I think. Yeah, this is what I'm looking for here. So to go from 22.5, this is one big candle, consolidation. Another big one for 3, consolidation. Another big one on 5, and it finished it off on 6. You couldn't see this on the daily chart, but you can see this in the hourly chart, that in less than 6 hours, the market had its play. This was the old, you had to have been at the computer at this time. And unfortunately for me, if you look at the time when this happened, and this is why I was a little staggering off, did I get that sell? Because I knew I missed it. This is the one I missed. Because this happened at 10:45 p.m., 23:15. This is when I would have already probably been in bed on this day. Or was this April? This was April. I wasn't even trading at April. Never, throw that aside. Never. I might have been in bed. I didn't own Steam dollars at this time. I waited for the pullback afterwards to get back in. Because I got back, or I got in. I never really was in it much before. But I entered long on this a week ago. We can change ago. So, but the whole point of this is that it had its spectacular move in a noticeable fraction, small fraction of a day, 1/3 of such. So these things can happen really, really fast when they go through such. It's not uncommon when you have the major moves. Not EOS, because I don't even know what it's been doing. I get that one mixed up with the one that had its OMG. It had the similar thing too. You have a quick move that happens really fast. That it's not uncommon to have a major correction. So this one had such. You go from 45 and you lose almost half your value. Now let's transition into OMI's Go, 15-minute time frame. I did take advantage of this sell even though I was sleeping at this time, because I had a sell order that got caught this one. So when I woke up this morning, I ended up buying a little bit of it. I only had 2 sell orders last night, this one and another, and I'll go to that other one afterwards. I can't remember what the code of that was, but the whole point of me bringing up OMI's Go was because of the date of April the 13th. The line goes all the way up to 235. It had an up day, but it lost a significant portion of what it had, about 1/3 of its value. Intraday having an up day. And then the market has managed to move in a normal, volatile way towards that high. It's pretty much at the halfway point almost, or noticeably below this high, noticeably above where it closed that day. There you go. So the whole point is, when you get those magnificent gains, then you can oftentimes get the volatility. Now here's the thing, you can say, well, back when it was 215, 216, this thing could have shot up to 30 or 40 and then pulled back. Yeah, maybe. Sometimes a big move will be bigger than such because they're not all the same. But regardless of if it moves 20% in a big play, 50% in a big play, or 450% in a big play, it's going to have a good pullback when it's ready to. Let's now move this to the single hour time frame and see, there's this move in here. It was very, very fast. This happened when I was this happened at 10 p.m. So I was at the computer watching this happen. I was trading it really, really finely, well, nicely, because I was able to get the sell orders in, and obviously there's your buybacks. That's the beautiful part. It's hard to get this sale. There's only really 2 ways you could do that. One, you have to have your sell orders in, and sometimes you're going to have your sell orders in and you sell at, ooh, I sold at 180, even though it went all the way up to 240. And you didn't get any of that north action above. That's going to happen. And then even if it was 183, at least you realize it did come back. And then the market, of course, continued to move higher. So the other order that I sold, and I bought it back as well. Okay, PayPay, or 10x Pay rather, was the code in which I sold north, or south rather, of the 20 number at a little after 1 in the morning. 19899. What was my number? I had 19778. So I pretty much got the top. So I wake up this morning. I didn't know I sold it because I did know I sold it because I did check the orders. That was the first thing I checked. And then I noticed my balance, that my pay BTC was worth in Bitcoin. Well, it was worth lower than it should have been because, well, my buyback occurred. Whole point of this chart is, and it really does show you that it's a lot easier for the most part to try to buy on the peak lowers than it can be to sell on the peak higher. And markets go up a lot faster than they go down, and that should naturally say such as well. I have noticed that I find sell orders to be a lot more valuable than buy orders do, for that one reason there. Another reason why sell orders are better than buy orders, where you may never want to have a buy order in, other than for short-term spec playing, of course, is because if coins become delisted, I could put a buy order in to try to get this at cheaper at a price of 13,000. If this thing gets a notice of delistment, that's going to buy for sure. And I could find that I bought, go to the code, see that I bought, say, 14,000, the price is at 9,000. And I'm not saying that this one would do such, but for codes that do get delisted, you're always going to hit when you have a buy order in place. And of course it gets delisted. And it's a normal buy order, of course. If I put a buy order for 1,000 Satoshi, even a delisting won't get a bought in when you're talking about 18 times lower or whatever. 10x pay token on the daily time frame has well, its best move since its decline. It had a huge rally from its at the outset of this, late July, going from the 237 handle up to the 1,600 handle. Several X times of a gain, but even a larger X amount of a loss, because point A is the July lows. Point B is the highs. And then lower low, whether you want to call it point C, you can call this a significant top here. Its move was from 115 to 390, so better than triple. So in a situation here, higher low from here, barely. But it's obviously made a clear state that this thing wants to revert trend. It's already done everything it needs to do to put this in a bull market. It's in such. It's band flatten out, establish resistance, come back to the band, breaking it. I mean, this thing has pretty much been bullish since the 14th. It's been bullish for like 5 days. And it's not much of a move now, which tells you good to buy, good to sell. Well, either or. It's box A or box B. This is a real reversal. That's the first thing. And if it's a real reversal, we got a long ways to go higher. When you're talking about making a higher low from a point A, B, C, D situation, with this high being C, then you expect the next breakout to be higher than such. But even if it matches it on this case from where we stand now, you're looking at about 120+% gain to get to that level. And then if you can retrace anywhere near this high, and we've seen large moves happen before, all I'll say is it wouldn't be a surprise if such an occurrence were to take place within a bull run. That's door number A. Door number B, oftentimes from a failed move in one direction, a fast move, the opposite direction will occur shortly thereafter after such. And the move here, statement, is on that of the reversal of trend. Price action is already broken out above the late March highs. It has already broken above the early March highs and is now currently coming back to that point right now. So if this move doesn't succeed, we would know so within the 18 average. The 18 average would obviously start to go flat. Price action would show weakness within the 18 lows, closing a few days consecutively below, or any of its few options it can have showing weakness on such. Then we'll be talking about that failed breakdown lower, and not only for price action to break this low, but at least come back down to the December lows and probably even do more than that, lower. So those are the two scenarios when I look at technical analysis, seeing patterns like I do here. And PivX will be the final code. Setup. How many times has resistance been placed between this level to this level? Now granted, as at April the 3rd, I don't really want to count this level again in here. So it established a range of major resistance from 578 handle up to 629. Sorry, I was chewing gum. You probably heard that. This is a magnificent bullish pattern. It's one of the ones where you know when it breaks above it, and you see it noticeably above here. It probably ain't gonna take too long to get to at least the 820 handle. And the 820 handle from where it stands now is an additional gain of 220. That's over 30%. But I like how this has done very well over the last little while within the 18 average. 400-minute time frame I think might look a bit better in here. This is just magnificent looking pattern. I think this is ready to pop today, tomorrow. I really, really do. From the time frame of this whole range in here, April the 4th, for the last 2 weeks, this thing has had a very nice sideways consolidation pattern. But the trend over the last 8 or so periods has changed. Green candle up on, well, you can see it. And then like 5, 6 periods going sideways with a nice volatile one here, the second or the third previous one shown, where price action came up for yet another time at around the 620 handle or high 610s. And now we have the current time frame starting to break through. So it's a very bullish pattern, almost stating that this thing is ready, full locked, ready to go. Yeah, I mean, if I was a gambling man, yeah, I am. I almost wish, I should almost go out and make the old school play where I put like a large significant portion on this, maybe put a stop loss. And when I say put a stop loss, that means when I see the price in the area, I would sell for a loss at some sort of breakdown level, and then just ride it to go higher. I mean, I'm not going to do so. I already own it like I normally would. So what that would mean for me as a trader, when I have one of my codes, of course this being one of them, tells me that the price is doing well, it's worth more than it should be, and I should sell it to what it's worth in Bitcoin based on how I've explained it in previous videos, that I would sell. You know what? This is a spot where I have to say to myself, at what price do I start selling this at on the breakout? And I think I have to go back to the daily chart to get the answer. One, I could just use Fibonacci. And really, when you look at it, you'd want a decent enough leg higher, that is. So just by looking at it blindly, which can work well enough, I see that somewhere around the 68 handle seems to be the minimum start. Keyword start. And where I would sell. Because it gets to close to 70, I'll sell some. And then it goes up to the 82, sell again. So it's, to me, either I sell once at around 73 and then probably again pierce higher, or I just wait the whole thing through and have the guts for myself. And this is hard for me, by the way. This is hard for me to do, or not do, is to avoid selling when I see the price up to, like, again, that 70 number, when I realize it's just going to go to 82. Because mathematically speaking, it is better for me to have one sell order in at 82 than two sell orders, one at, of course, around 70 and one around the 82, and then just sell a lot more at that point. And I'm always selling it back to what it is supposed to be worth. And of course, that is done via a spreadsheet for me. And yeah, thank you for tuning in, because this is like over a half hour long, and have yourself a great day. Bye-bye.